Good afternoon, traders. This is Christian Tromhertz, Traffic Trade Group, and today is Thursday, November 3rd, and this is your end of day market recap. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for education purposes only. So where to start? A lot of things to talk about today. A lot of interesting things. I'm going to try not to talk too much about the Fed, because I think I've overtalked, or maybe not overtalked, but I've talked enough about the Fed and the implications and all of that. Really, this is kind of a wait and see. That's the main thing that I'll say. I'll also tell you that the Fed fund futures, from where they did move about 14, 15 basis points from where we were pre-meeting, before the Fed meeting. So there was a little bit of a hawkish adjustment, but not much. I mean, again, we're talking about 15, but not 50, 15, 1.5 basis points. And, that's about it. There's a possibility that they could raise in February 50 basis points rather than just 25, but then it really, again, trails off there. So again, there was a hawkish move, and really, just like the Fed, for what they mentioned yesterday, it's going to be dependent on what inflation reports come out, and if they come in less than expected. Note, tomorrow we get a monthly jobs report. Probably any bad news will be good news, and then on the 10th we get the CPI report. That's all we can really kind of say about that for now. One of let's talk about the implications, and let's talk about the winners and losers right now in this market. It seems like I actually like the price action for the most part until about the last hour of the day. I was finding some opportunities in there. I thought that there was good strength in the Dow stocks today. I thought that there was good strength in the small caps. Those are two areas that the market where we've seen some leadership over the last few weeks, and I thought those areas did a pretty good job in a tough market. I also like that bonds were kind of grinding higher. Let's talk about bonds in the dollar, and then we'll talk about where there's some strength in this market, and sector wise as well. But here's the move in bonds today. So yes, it's down. This is the 30-year bond futures, which I usually use. That's the long end of the curve. We are seeing different moves across different maturities. So, of course, that screen that's up there and talking about what the Fed controls, that's the short-term rates. When we look across the curve, you could see that the biggest move in interest rates, so this is basis points, so 9 basis points move in the 2-year all the way up to 471. It's a decent move, and then the 10-year also moved, but about half that today, up to 4.14. So again, you look at TLT, which is up about 0.5% today. Down about 0.5% today. We're trying to hold on to this bottom of value. We tagged, this is the new value area for November. So price is trying to hold on to that. You have a hammer bar here, but you don't have any change in trend, in terms of the price is below the 5 period moving average, got rejected at the 20 days. So this continues to be a must watch. And until like about 3 o'clock today, I thought bonds were doing like a decent job actually coming back. Right, this is where we started. Just to give you a visual, this is where bonds were getting really smacked, till about 9 o'clock this morning, and then they rose up till about right near about 2:30, and the market started to trail off again as rates were going higher. So again, a lot of implications, and we're going to get to, we'll talk about the FANG stocks and the growth stocks, but you could look at some of these names that reported earnings today too. They're really getting hit because it's a different game out there right now. Why is it a different game out there? Because higher interest rates mean companies that don't earn any profits or are not doing well in this environment, they're going to get hit even more because the higher valuation. Look at Team, down 20%. I don't know if I've seen that in a long time, but net, which even had They even beat their estimate. Cloudflare, right? If you go through their numbers for Cloudflare, they actually, unless I miss something, in that case, that could very well be, because I don't pour through these numbers, but they beat their earnings 11 to 12 cents versus 3 to 4. That's the guidance. So right, so why is this name down? Sees adjusted EPS 4 to 5 cents, estimate 1.7. Right, and the name is down to $43. And again, unless I miss something coming over those numbers in the quick 5 seconds that I did, it's the valuation. There, when you're dealing with interest rates this high, it is a completely different environment than we were in 6 months ago when interest rates were about 0, and when the Fed was, supplying liquidity to the market. So I think that's very telling, and we're seeing this all over the place right now. If you don't have strong earnings and a consistent earnings stream, this is kind of what's going on all over the place. So I'm using Cloudflare as a little bit of a poster child for this market. And if you don't have stellar earnings, there's a lot of these moves right now. Okay, so interest rates are a must watch, and already at the higher level. Here's the US dollar, which actually this did not really sell off during the day. I mentioned bonds kind of rallied a little bit from the lows. The US dollar did not, and you could see the big jump today, up 80 basis points and back above that trend line that I've got drawn, and back above all the short-term moving averages. So bond prices and downtrends, right, which means rates, because it's the inverse, of course, between an interest rate and a bond price, giving you some I don't even think that's CFA level. That's economics 101. But and then on the other end of the spectrum, the dollar is still very strong. So these things are generally risk off what I'm describing to you. So that said, let's go through the indices. Right now, and again, this happened very quickly, but in a day and follow through today, we broke the 50-day moving average. We broke the 20-day moving average. We're prices below the 5-day moving average. To me, that means have a hedge on, right? And to reduce exposure. When we've lost, forget about the big daddy up here, the 200-day moving average, but the short-term trend has been lost again. And that remains to be seen. And let's go through a couple of these other things. IWM is a bit more constructive, even though that's still below those moving averages. We're hanging on to the top of value for now. This had a chance today too, it almost got back inside value for the day. It got, it actually right around 2 o'clock was the best looking candle, but you could see the fade there towards the end of the session. So I think IWM is a must watch. Also the mid caps, which someone brought to my attention on Twitter, which I haven't looked at in a few days, actually, to be honest, but that's also holding in there. And that's right now, the mid caps are above the 20 and the 5. So, if they want to recover here, some of them are kind of holding on here. Here's what the Dow looks like. The Dow is the best out of all of them. And we'll see if this can kind of hold and fill in here. Above the 50 and above the 20-day moving average. Note, it did lose the 5 and has to deal with the 200-day moving average. And then the worst of the bunch is NASDAQ. Remember, we thought that this could look like an inverted head and shoulders. And I said, wait until the pattern confirms itself, right? Well, we never got the pattern to confirm itself. So, and it looks like, really NASDAQ is getting hit very hard. And any stocks, like I don't have any positions in these names, so I really wasn't watching that closely. But I was just really surprised how much the unwind is happening. Look at Apple. Remember, this was just earnings just a few days ago, right? About a week ago, in fact, right? The stock was all the way up to 155. That's a rejection that's definitely a rejection of the 200-day moving average. But I didn't trade Apple. I just thought it's too noisy of a stock. There's too many things going on with globally. I'm surprised that they still make their phones in China. That they're doing the majority of, I guess, their manufacturing, because that was the latest story that brought them down, was manufacturing issues. But look at that come undone. Again, it was at 155 down to 138. And then if you go across the group, so again, I'm kind of going through the bad stuff first, but Meta continues to go down. Amazon continues to go down. Now we have taken out this version point of control on the weekly chart, but and then Google as well. Look at Google down 4% today. I mean, you look again, going over the performance, the Dow is only down 0.5% today, and Google's down 4%. So these things are really coming undone pretty quickly. Again, it doesn't really matter to me all that much because I'm not in these names, and I haven't been. If you've been a regular viewer of my video, you know that I've been saying, like, to avoid this group, that they lost their market leadership for some time. And now we've kind of got what I've been referring to as the Great Reset. And that was something that I put out on Substack as we entered it was Sunday, I think I put that out, saying like these groups are done for now. And you just kind of have to wait. I will say this too, before I kind of get into like where there is some strength in this market. If you're having a tough time in this market, it's a bit easier for me because I've been through, I've been through a lot of these phases where different stocks lose leadership, right? People fall in love with certain stocks, but they do go in and out of favor. And if you haven't experienced that before, I get it. It's something that you kind of learn with experience. I started my trading career back in 1999, where we saw all these high flyers and everybody was in love with a whole bunch of stocks. And just as quickly, for about 2 years, everyone was in love with the stocks, and then they went bye-bye and they never really returned for years, right? I always bring up Cisco as the example. Cisco was the big darling of the dot-com bubble for years. Cisco was this just machine that just kept on going higher. And I remember, through a couple painful experiences that, when Cisco started to crack and made its first leg lower, I was like, hey, before I knew anything about technical analysis, I was like, hey, I could get Cisco cheap, 30% cheaper than it was. And then it just kept on going lower and lower and lower. So if you're in this bucket where you're like, hey, I don't understand, this is a good company, it's a good quality company, things change. Leadership changes in markets, and it can be quite painful. So if you're going through it, I would say, number one, this happens in the market. Also, one of the things that I think is so paramount that I stress at Tribeca Trade Group is risk management. That's why technical analysis is so important, because it tells you a level where you're going to be right and where you're going to be wrong. But you have to follow that, right? And understanding that when you get into a trade, before you even get into a trade, you should have an exit plan, right? Knowing where you're going to get out of the stock if you're wrong. Again, the more that you take your ego out of trading and understand that you're not going to be right all the time. In fact, you're going to be wrong quite often. But you've got to get out of the names that you are going to be wrong in. You've got to get out of those names like as quickly as possible. And the sooner that you figure that out in trading, right, the better that you can kind of become a very, very good at this game. Because I've just seen this over my career where you don't think a stock is should keep going lower, and it just does. So again, it's quite alarming to kind of see some of these names, go down as fast as they've been. But I'm not in any of these names. So, and I haven't been, and I've been an advocate saying, don't be in any of these names since they broke, since really they broke down. All right. And haven't been showing any type of leadership, relative strength or anything like that, even though the whole market's is in a bear market. Okay, so that's that's the negative, and again, I just can't stress enough with how this market is moving, that you have to be a risk manager first. Understanding that you've got to protect your principal, right, and your trading account. when you have moves like this. Okay, so let me let me talk a little bit about the positives, right? Because again, you go through some of these charts, and it's amazing because if you look at a certain group of stocks, you'll think, "Oh my God, this market is in a major bull market." So I bought the dip a little bit in energy stocks today. Because that's really what's been working. I bought MPC, right? This is a refiner. I've been paying very closely to the refining group. MPC had these great earnings comments the other day, and so that's what I trade. And again, very quick with taking targets right now. This is not how I usually like to trade, taking dollar targets. But that's what this market is kind of giving us because of the again, looking at how the overall market is trading, which again, if the overall market does not look good, I'm much quicker with my trades. All right. HII was another trade that I went after. The defense names. So energy, so the other thing is like, I watched what was going on with Conoco today too, which is up again. You look at all those stocks, the FANG stocks, and look at ConocoPhillips, up almost 6% on the day. So the three biggest stocks in XLE are Conoco, Chevron, and Exxon. They all look good to me, right? Exxon had a nice day today, up over 1%. Chevron actually looks like actually Chevron was up 1.5% today. But regardless, if you don't want to pick individual names, right, just pick the ETF. So what I did today was I scaled out of this single stock name. I actually added back. I actually took a target, added some back. So this MPC worked really nice for me. So again, I show you all my trades. I'm going to be running, so this gives you a good glimpse of like how the day unfolds at Tribeca Trade Group. For new members, I'm going to be running in like an end of year special. So this weekend. So I would suggest if you like these videos and if you like how I kind of, dissect the market, find where there's strength in this market and try to capitalize on it. And then also just knowing when to kind of reduce risk. If you like that, and if you think that's going to help you, I would say, sign up. And if you haven't tried Tribeca Trade Group or you haven't visited, I'll have a end of year special for you coming this weekend. Let's talk about the defense group, right? That's been another. So I also took a shot at this name because they reported really good earnings. And again, I noticed that there's resistance up here, 247.91. So why mess with a name that worked really well for me? Where is this? 238 stopped it. So I did this like right around 10 o'clock this morning. And this thing worked really well. So I got out of this HII. I got out of the third target, 246, paid 238. Notice it closed a little bit lower than that. But here's now that it made this nice recovery, here's where it gets difficult, right? Here's where the heavy lifting comes. So I don't need to be in that name. Now you could look at other names in the aerospace and defense. Look at General Dynamics, right? Nice dip to buy there, actually finished up on the day. But if you go through the aerospace and defense group, Raytheon is pretty strong. Honeywell, which is both, an industrial and also has some aero exposure, this had decent earnings. Still, it's going to have to break 207. Which kind of brings me to the next group. But, another name that is one of my favorites is this Northrop Grumman. And you have a dip in Northrop Grumman. So I'll be looking at this name tomorrow. Right. But nice uptrend, checking back here. Let's see if it comes into 523. But as I mentioned, the last couple of days in these videos that a lot of names got extended to the upside. So I'm actually welcome some of the pullback that we're seeing in names that are in uptrends. Look at this name, GTLS, Chart Industries. Really nice breakout after earnings. Again, you look at some of these stocks and you're like, wow, we must have a bull market on our hands. Up 6%, back out to new highs, right? And even across groups. Look at ELF. And the run that ELF Beauty has been on. I mean, you're kidding me, right? Up 15%. So if you could kind of, and this is what we try to do, is try to find, try to give members a feel for where there's strength. Also, look at the industrials. The industrials are knocking back on the 200-day moving average again. Right? You would think with all the dollar strength that this would be one of the most vulnerable groups. Nope. And they're coming out. Some of these names are coming out with good earnings. Look at Ingersoll Rand today, up 4.7%. I think this can maybe get up to 55. So, and above the 200-day moving average. So again, it's quite amazing to kind of go through. Now, granted, my message, I put out these audio files to members during the day. And one of the things that I said was, this day, even though there's some strength and some recovery, I actually put my hedge back on because I came in today wearing SQQQ. I took this off today. Right. And I said, I will look for a bounce to kind of reshort. We didn't get much of a bounce. Right. So, I put some back on here. I took this off, and then I waited, this was at 1020. And then I waited to kind of put this back on. So while the indices are below those short-term moving averages, I am carrying a hedge, definitely. All right. I even took a little bit of a target here at the end of the day, but until this changes, if I'm carrying swing trades, which I am, then I think it's important for that. A couple other names too. Right. And you can, it's not all tech, right? That is bad. Look at IT and IT, which is Gartner, right? This is holding the earnings gap, right? And ultimately my target is 334. SMCI finished down 1.4%. I looked at putting this trade back on, but I would like to give this a little bit more backing and filling a little bit, but that's another one that's strong, right? And again, you could short, coin, which I think didn't do much on earnings. Let's see. I had a trade on for this for short, and I took this off at 57. And I added back, if you go to our earnings channel, I actually had a couple put flies on, one for coin, which probably won't work. And then the other one that's not going to work is Dash. These are put flies. But yeah, so that's the story there. Is there anything else that I wanted to go over? WWE, right? Recovered a little bit. This took out 3 Virgin point of controls. Right, it'll be interesting to see how this works. Right, and that's into the to the bottom of value. So that is it, and I think that's good enough for today's video. But yeah, I mean, I think that while the indices are below the short-term moving averages, I'm respecting the price action and the short-term trend and have a hedge on. But I am participating in some of these areas that actually are holding up and look really good. One other name that I'll bring your attention to that, again, I didn't want to go, I saw like 2 other names that I wanted to put trades on today, and I'm like, I'm not going to do it. Look at this, not STNE, but that's also an interesting one, right? But STNG, right? Another one too. You look at, we must be in a bull market, right? There was some call buying out, and this one could be the CEO who likes to buy calls in his own stock. Kind of crazy, but this is a strong trend too. So I'll leave it there, guys. I hope the risk management helps to kind of understand that, and I hope that you're surviving and doing okay in this market. And again, I will have a special for new members come this weekend for the end of the year. Have a great night, everybody. See you tomorrow.